What is up, everybody? Welcome to the very first episode of Grow with Zay. Now, before I get into the actual video, I just want to give you guys a brief kind of overview of why I started this channel, what the channel is about, and what it's not about. So, with no further ado, let's get into it. So, the reason why I started this channel is because I really want to talk more about business, entrepreneurship, investing. I want to talk about conversations that weren't really talked about in my household growing up, things I wish I would have known earlier, things I wish I would have known to pay attention to earlier. Like, I wish I would have known to start learning about the stock market back when I was in high school, being forced algebra down my throat, not knowing how powerful the stock market is when it comes to building wealth, or, investing in real estate, or the proper principles and foundations of starting a business, the journey of entrepreneurship, the mindset behind it. There's so much I wish I would have learned, and so many conversations I wish I could have been in on at an earlier age. And so the reason why I started this channel is because I want to share that information that I missed out on. I want to share it with you guys. I want to get you guys in the room, get you guys in the conversation of things that might not be talked about in your circle. Okay, so we're going to learn a lot on this channel. I'm putting out videos every day. That's my commitment, is to put out a video every day. Just pretty much sharing my education. And when I say sharing my education, I mean sharing what I learned. So I'm going to be learning and digging every day. And I want to share what I learned with you guys as well. But it's not just about becoming walking encyclopedias, because there's a saying that goes, knowledge is power. But it's not just knowledge is power, it's applied knowledge is power. Because what's the point in knowing information if you don't apply it to life? And we live in a time and era where we have access to pretty much unlimited information with YouTube, the internet, books, audiobooks, podcasts. There's an abundance, a plethora of information that we can access for free or very affordable, which we'll get into another conversation of why you don't really need college, but that's another video we'll talk about later. But that's pretty much what this channel is all about. So I appreciate you guys coming along with me on the journey. We're going to learn together, grow together, fail together, and succeed together. All right, all those things, because you can't just have one. You'll take the good, the bad, and the ugly. And this isn't going to be, entrepreneurship is like a roller coaster. There's going to be ups and there's going to be downs. So you got to be willing to be in the ride for the long run and not just looking for an overnight success or overnight come up. But with no further ado, guys, for the first episode, I want to get back to my roots. And when I say my roots, what motivated me, inspired me to want to pursue entrepreneurship, pursue business, and just learn this game. And that thing is, or that book, or the idea was triggered through the book, no other than Rich Dad, Poor Dad. Now, I don't have the physical copy on me right now. I've actually been listening to the audiobook again. I had the physical copy. I think I have like 2 copies of it. But that has been the #1 book. It's been the catalyst that really got me even interested in business to begin with. And so I want to share some of the really powerful principles I learned from the book, Rich Dad, Poor Dad, that I want to share with you guys. I think it's going to be vital for you guys to learn, to apply. But regardless of what you learn from this video, I definitely recommend, if you have not read the book, go back and read it. And even if you have, go back and read it again. Let me adjust the light. Cool. Had to move it because I think the light was blurring in. But principle #1, let's just talk about a little bit like psychology. Because when it comes to any endeavor you have in life, is really about the mental is #1. Controlling your mindset and just thinking differently. And so the principle #1 I want to talk about with that is that everybody's reality is different, right? Rich Dad, Poor Dad is about having 2 perspectives. One, a traditional perspective that probably most of you guys are used to, is the parent who says, go to college, get a job, get a good degree, whatever. And that's the path, buy a home. And that pretty much traditional mindset that everybody has kind of pretty much grown up with. The other dad was a less traditional, talked about that it's not about traditional education. Pretty much kind of it's about street knowledge. It's about assets over liabilities and knowing about cash flow and your balance sheet. That's the information that the rich dad was teaching them. So he came from 2 contradicting perspectives, and he had to choose a side of which path he was going to go down. And obviously, he chose to follow Rich Dad. And that's what allowed him his success today, is just having those 2 comparisons and having a mentor. So #1, like I said, was really about the reality. His father's reality was traditional education background. His rich dad was about capitalism and business. But it wasn't the capitalistic dad. He wasn't greedy. So there's a balance in that. But the whole mindset is that there's going to be some people that you're going to get advice from, and they're going to tell you entrepreneurship doesn't work. You're going to fail. We tried that. We tried this. That only the 1% can become successful, and you're going to believe them. And so, #1 thing is you have to learn to weed out certain people, certain information, and ignore certain people who are going to give you essentially bad advice or advice from their reality. And just say everybody's reality is different. Because they never succeeded, because they failed and never tried again, they're going to tell you that something doesn't work. So number one, you have to be willing to eliminate voices and disregard certain people's advice, even if you love them, even if they're your mom, your dad, your grandma, your auntie, your uncle. Some people you have to learn to ignore. So I would say that's principle number one, is define and choose your reality that you're going to follow. Because whatever you choose, that will be a reality. It's not going to be everybody's reality, but it will be your reality. That's principle number one. Number two, one of the big things in the book, it talks about assets over liabilities. So what are assets? Number one, and what are liabilities? Number two. So assets are defined as things that feed you, things that make you money. Liabilities are things that take money out of your pocket. So let's get some examples. Your car, most likely it's a liability. Now you can argue if you use it for Uber or Lyft, it could be a liability, an asset, but you still having to go trade your time for money with it. So we're gonna say your car is an asset, right? If you have you gotta pay insurance on it, you gotta pay taxes on it, you gotta pay a car payment if it's financed, you gotta pay repairs. So all your car does is cost you money, right? Also your home, right? The home you're living in. Now, he gives in the perspective, like most people think their home is an asset because of appreciation, and whatnot, but most people don't ever end up owning their home. So yeah, there's some money in the equity, but for most people, they don't get to capitalize on that equity from home ownership. Most people, the home is literally just an expense and they're not making money from it. It's costing them money. So most people though have it backwards. They have liabilities, but no assets. Assets, what are some assets? A business, stocks, bonds, mutual funds, talks about royalties, different things, basically things that are making you money. A YouTube channel that has AdSense, that's an asset for you. If you sell a digital program, if you have a product, whatever it is, those are assets, things that are putting money in your pocket. So knowing that core principle will then get us into part two, is how the rich do things versus the poor. See, poor people, they go get liabilities first. Rich people get liabilities last. Which gets into this. So he talks about with rich people, you might see them with a nice luxury car, a big house, right? And so you as a poor person or whatever, not knowing the full analysis or you're just seeing a little snapshot. All you've seen is outside. You'll see somebody with nice things. And a lot of poor people want to imitate rich people. That's why some of the poorest people are the ones wearing the name brand things, the Gucci, the Louis Vuitton, all these name brands and expensive things to look like they're rich, but they're not really rich, right? So what happens? Rich people, they get income from whatever it is. Say it's their job or a business or whatever. But they don't just take that income and go immediately buy liabilities. What they do is they reinvest that money. So they create multiple streams and reinvest it. So say, for example, the very basis, a job, which most people have a job, most people don't own businesses. They take the money from the job, instead of going out and saying like, how can I spend this money? They're looking at, okay, how can we reinvest this? How can we grow this nest and turn into a bigger nest egg? How can we build an empire from this paycheck we get every 2 weeks? So we're gonna take that money and we're gonna invest it in the stock market, or we're gonna invest it in real estate, or we're gonna invest it in starting our own business. And so that thing produces income now. So now we turn one income into two income. And then if we want, we can turn into a third income, a fourth income. But on the very basis of it, we're not just gonna take our income, our main income, and immediately go start spending it. We wanna recycle our money, right? We wanna recycle it, put it in a cycle of it goes from here to here to here to here, and then it leaves you. Versus most people, money comes in, money goes out. So it's just boom, boom. Versus wealthy people cycle their money around into different income producing assets. So for poor people, they go and get their paycheck. How can I spend this? How can I go buy this TV? This is why people are stuck in what they call the rat race. Is because they get money, they go buy liabilities, and then they have to keep going back to that job or whatever to pay for those liabilities. So you'll never get rich if you're chasing liabilities. The only way to get wealthy is to chase assets. And that's pretty much the number one core principle, is learning how to build assets over liability. Now, I've probably repeated myself a lot on that, but it's important that you get that ingrained. Assets over liabilities. Repeat it to yourself. Assets over liabilities. You want the nice car? Build an income stream that pays for it, right? I'll give you an example. The car I have right now, I didn't pay for it with my main stream of income, right? I built my main business, which I have a pressure washing business. And then from there, I have a digital online product where I teach people how to get started in the pressure washing industry. That income pays for my car payment. So it's not directly coming out of my first pocket. I recycle my money and then I use the overage money to then pay for the liability. So that alone is one of the founding principles that you really need to understand. Then it gets to this. The next thing that's really important in the book is the 4 cash flow quadrants, right? On the left side, you have the E's and the S's, which is E stand for employed, and under that stands for self-employed. On the right side, you have the B's and the I's, business owners and investors. Most people on the left side of the quadrant as employees, right? Why do you not want to be an employee? First of all, you're not in control of your income. 2, employees are taxed at the highest rate, right? And also in that category, you're trading time for money, and you can never get wealthy trading your hours for dollars. Because honestly, it doesn't even make sense. Your time, the most valuable asset, right? You can't get time back. I spend an hour, I will never get back. I'm not guaranteed another hour. So how can you really put an exact dollar amount on your time? And most jobs are only out here paying you very little for your time to begin with. Even if you're getting paid $50 an hour, it's still, there's no number you can put on such a valuable thing that you cannot get back. So, but the minimum wage where I live, North Carolina, I think is about $7.25 or $8. I don't know. But 1 hour of your life, they're only valuing at $8. Do you think you ever get wealthy making $8 an hour? Even 20, even 30. It's not gonna happen. So essentially you have to then take control of your income. Put time on your own terms, right? That's very important to remember. So that's the top things is your time controlled, your income bound, and your tax the highest on the left side of the quadrant. On the right side, the B's and the I's, right? With the B's and the I's, the way it works, the way the flow works for them is they earn money as a corporation, right? You earn money, you spend it, and then you're taxed. Why is that important to differentiate between an employee? Because employee earns money, they're taxed, and they spend it. As a business owner, a corporation, you get to take part in tax deductions, right? So the reason why the flow is you earn, you spend, and then you tax is because corporations are taxed on after deductions, right? So you can lower your taxable income. So for example, I earn say $100,000 in my business in any given year, right? But if I'm an employee, I'm gonna pay taxes on 100,000. But as a business owner, I may pay taxes on only 50,000 because tax deductions reduce that taxable income. So what things can you write off as a business owner? You can write off your meals. You can write off clothes if it's for business related. You can write off travel if it's business related. A portion of your home if it's a home-based business that's dedicated to that actual business, you can write that off. Miles, vehicle expenses that are all business related. So pretty much you can start writing off most of your life. Obviously, I'm not giving any legal advice or accounting advice. You want to talk to your CPA about that. But that's just some of the things you get to benefit in when it comes to being a business owner. So most people's number one expense is going to be taxes. So if you make 100,000 as an employee, you're probably going to see 40% of that gone in taxes. So you gross 100,000 as an employee, you're probably only going to see 70 of it, if not less, because of taxes. But as a business owner, right, you get to spend that money first and then say tax. So instead of giving that instead of having to pay the government $8,000 in taxes, you can be like, all right, you know what? I'm gonna go buy a business vehicle and I'm gonna spend the money on myself, my own business, before I give it to the government. So then now, you made 100,000, boom, tax deductions. Now you're only paying taxes on 50,000. So you just reduce your tax expense by a lot. And then that's really the main thing to understand from the book it's really about mindset, assets over liabilities, and then cash flow, right? So knowing how to manage your money, how the flow works. Those are the top principles from the book that I would honestly, that I've honestly gotten out of it. Really, I think they're the most valuable when it comes to your foundation of being an entrepreneur. Is really, like I said, getting the right perspective, changing your reality, understanding what assets over liabilities are, and then once you know what assets are, now you can go out and start building assets. But then once you build assets, you know, okay, it's not about how much money I make, but how much I keep, right? If I make $1 million, but $1 million goes out, I'm still broke. I'm still chasing my own tail. So I go from, I make $1 million, now I gotta figure out, I have the money, right? Now I gotta figure out, how do I keep as much of this as possible? And that's why he gets to talk about taxes and other investment strategies like real estate, which I'm only giving you this information so you can go out and do your own research. This is not about me being a guru or a teacher. I really just want to be an informer, right? I want to inform you of what's out there so you can now go learn on your own and apply this. This is what I mean when I want to get you guys in the room. I want to get you guys in the conversation about things that you need to be aware of. But that's pretty much it for this video. I really want to inspire you or encourage you to go out and read that book, purchase it, listen to it multiple times, because at different levels of your life, you're gonna get certain pieces from the book. So if you're reading it right now, you're just gonna start entrepreneurship, you're gonna read the book and you're gonna get it's gonna be really good, but you're gonna get a little certain nugget out of it, right? But then a year or two later, after you've been in business for 2 years, whatever, you've made some money, you're gonna read the book again and you're gonna get another nugget out of it. And that's the important of repetition, is that you're not gonna read something one time and fully understand it. The book information, or not just that book, but information in general, is evolving, right? So the same thing, the same piece of information can provide you different value at different points of your life and different seasons, depending on where you're at. So I'm gonna leave the link of that book in the bio. I suggest you either get the audio book, get the physical copy, and definitely dig into it, guys. But this has been episode number 1 of Grow with Zay. I'm super excited for you guys to be with me on this journey. I want everyone, every single one who's a part of this community to come up in 2021 and beyond. Whenever you're watching this video, I want you to come up, guys. I'm trying to come up. I'm trying to level up, make changes in 2021 and beyond. And I want as many people as possible to come up with me. So remember, don't just learn, be a practitioner. In the meantime, guys, y'all keep grinding, keep learning, keep growing. Peace out.